Right now, I got to bring in Ozzie Jurek. You know, if we haven't been dealing with enough Ozzie over the last month or so, you know, with the changes in mortgage regulations, we've had other things happening. But now I hear, listening to the CMHC CEO, that's easy for me to throw that many letters at you, the Canadian Mortgage and Housing Corporation CEO, Evan Sindall. I mean, boy, I thought that was qualified as a bombshell this week.
Yeah, no question about it. I mean, first of all, you and I talked about it when the mortgage rates came in. I called it that the government gave an early Christmas present to the 6 banks. You know, they can raise the rates sort of nilly-willy, and they sure as heck did. Last week, the TD raised its variable rates. This week, RBC and TD raised some of its fixed rates, and some of those rates are now almost a third of the percent higher already. And then Evan Sindall says interest rates are too low. Of course, I don't necessarily disagree with it, but then he follows it up by saying the regulators should increase the minimum down payment, saying that low down payments are the problems. Then he says we should impose more mortgage qualifying restrictions, and we should kill all provincial programs that help first-time buyers, and then bring a loan-to-income cap that would limit the size of a mortgage buyers could get qualified by qualifying on their income. Wow, huge changes that he's proposing.
Well, I'm just thinking, how popular would it be? Think about how contrary that is to the sort of general discussion going on right now, where there's been protests, there's been all sorts of talk about first-time buyers having difficulty coming into the market. I mean, didn't Ontario just say it's going to double the land transfer tax exemption for first-time buyers? I mean, that, you know, to say we need to kill all provincial programs, you know, for first-time buyers, it seems certainly there's going to be a big rip-roaring discussion over that one.
Well, it exactly. In fact, all of the government measures have been anti-first-time buyer, anti-affordability, yet the official position is we're doing it to increase affordability. Now, he's almost putting stuff on the table that it makes it almost impossible to qualify, but he's also in a big fight that he wants to do with the banks because he wants to share the risk of insurance. Now, bringing sort of a mortgage insurance now deductible for the banks is his idea, and government-backed insurance when a loan falls to a certain threshold, like after a certain number of years perhaps. Canada should experiment with a shared responsibility mortgage where the borrower's payments go up and down with the prices in a given area, and then charge higher premiums that have historically had higher defaults, like Eastern Canada and the North. I mean, these are bombastic statements, and I'm just thinking, what does it mean? Because he says if rates go up 2.4% in the next 2 years, which when we can go up a third of 1% in a couple of weeks, that would cause a 30% drop in house prices and would lead to the failure of domestic financial institutions. I mean, he's really putting on the table some sort of a dramatic, you could call it fear-mongering, but it probably is more likely he expects rates to be a lot higher, and he's scared.
Well, I mean, that's certainly going to be headline-grabbing when somebody from a Canadian government institution like the Canadian Mortgage and Housing Corp starts saying that, you know, if interest rates go up like that, there's a 30% drop in house prices. I mean, my goodness gracious. But as you say, there's a lot going on sort of underneath here. The demand that, you know, maybe banks take on more of the mortgage insurance risk, I think, is a very, very good point you're making, you know, because that could be underlying a lot of this talk at this point.
Well, that's it. So obviously they don't, you know, these are big bosses, are big institutions. They don't make these statements without thinking. And by the way, he made that statement in London at a private talk to a highfalutin banking group. So, but they did put it on their website afterwards. So anyways, banks that have to share a premium, Mike, would have to charge for that. So there'd be higher rates. First-time buyers that are less in the marketplace, well, that would also affect the second-time buyer and the third-time buyer. So the market could stall onto this if it happened. And when you look already in the United States, the 30-year mortgage rose from 3.52% to 3.94% in a week. It's now at the highest it's been all year. So this bond market collapse that you talked about with Mike earlier has had an impact, because what people don't realize is that our variable rates are tied to the prime, but our fixed rates are tied to the bond market. And the bond market goes higher, and it's more costly to borrow there. And then you and I have to pay more for mortgages.
Well, let me ask you this. What do you do? You know, you talked about earlier with us, you know, over the last couple of months, you don't know so much about interest rates, but you may have trouble getting a mortgage altogether, and I think that prediction has absolutely come true.
Yeah, Mike, that is the most worrisome aspect. You might have, you're a young, aggressive family, or you have a rental property, or two even, but you bought them under the then prevailing rules. Now the renewal comes up and the bank says, sorry, you no longer qualify. That is now not just possible, it's probably likely. So I would go sit down with my mortgage broker or my bank, whoever I prefer, and I'd say, look, what would I have to do to go long on the mortgage, or at least for the time or period that I want to keep those properties? It's more important to make sure that money is available to you than worry about another tenth of 1% or quarter of a 1% interest rate, because if they do go 1 or 2% higher and you don't get the mortgage, you're going to be in trouble.
Well, let me just finish with this. Is there even such a thing as a hot property in this environment?
Well, we always find some. We kind of always like Pemberton. We found a Pemberton condo for $228,000 and a solid 2-story home with a very nice view, a large flat lot and fully fenced 3-bedroom double garage for $298,000. Hey, and Pemberton is paradise.
And there you go. For those who are not living in British Columbia, Pemberton is just about 20 minutes from Whistler. And Whistler just announced that their ski season starts on Wednesday, a day early. So that'll be
one day early, yeah.
Yeah, 1 day early. That'll be an added attraction. Ozzy, go out and have a terrific weekend, because I know your ski season's about to start too.
Yeah, it is. And you know, Mike, when I ski like a young god down the mountain, nobody that I know knows it. But when I lay underneath the lift with a pole sticking out of my ear, people I haven't seen in 20 years say, Ozzy, how you doing?
Well, they love to know that some things don't change. Ozzy, go out and have a great weekend.